All right, what's going on? I know that there's been a lot of talking about the bank closures, okay? And so there's been a lot of talk going on about, major banks that are closing and what's the effects with the mortgage industry, how that's going to affect you. And a lot of people have, I've had some conversations and we've been talking just simply about, people are being scared because of, hey, the banks are failing. What does that mean? And of course, automatically we're all having flashbacks, or people are having flashbacks to back in 2006, 2007, 2008, when the mortgage industry or the housing industry took a huge crash, right? So what I want to provide is some brief perspective and differences in there. So with the bank closures that have been taking place now, I won't say that I know exactly, what the collapse was caused, but I do know from what I'm gathering is that none of it was due to as far as mortgages, which is a major difference from before. So back in '08, when banks were failing and this was going on, what was happening then is that they had a bunch of mortgages that people eventually could not pay on anymore. Now, what's the difference between back then and now is a big difference is what's happening on the mortgage side is that because of what happened in '08, '07, '08, because of what happened, the banking or the mortgage industry drastically got regulated and changed. So what does that mean? Why is everyone saying, hey, the market is not going to crash, the housing market isn't going to crash, the mortgage industry isn't going to crash? The reason why is because when you get a loan today, you are going to be qualified for that loan. Now, granted, yes, things happen, income, jobs, whatever the case is. But the point is that whereas back then, '07, '08, and even before, people were getting loans that they clearly were not qualified for. And so that had nowhere to go but, of course, down. If you're getting $1 million property, $2 million, and you clearly don't have the income to back that up, then of course we're going to have a problem there. So what's happened now since then, the government and there was regulations as far as on the mortgage or the qualification of customers. So even now, that's why when you go to apply for a loan, that's why everything is going to be extra. If you go through the loan process, you understand like, hey, you turned in your documents. Well, what about this on your pay stub? There's a lot of stuff going on because of what happened in the past to make sure we don't go down that avenue again. We want to make sure that when you get a home, you have the money and you're qualified with your income to pay for that mortgage. Because what happens is that if we have, 1,000, 100,000 mortgages and, people are not qualified for them, then of course you're going to have failure on the back end when the mortgage payments are not getting paid. Okay. So, like I said, one of the things, there's a lot of talk and a lot of, everyone is trying to, put fear and all of this into the marketplace. And I'm not saying there's nothing to be concerned with, but when it comes to your plan, you need to make sure you understand, and I would not let that stop you if you're looking to purchase, you're looking to sell, whatever you're looking to do in the mortgage industry, what's going on with some of these other banks that have failed. I would not let that stop you. Definitely do your due diligence to understand what's happening, to understand how that affects mortgages, and to make sure the right move is happening. My first thing I would do is talk with the expert. A lot of the times, like I said, Yahoo, news outlets have different agendas that they're trying to push, but you need to make sure that you understand what's best for you. And so I just want to kind of just give my little 2 cents on that information and understand that, that the mortgage industry, where we're at right now, yes, rates are high. Affordability is a huge concern. However, at the end of the day, if you can afford to purchase a home, real estate is a great way and a great investment for you. As far as it failing and what's going on, that's just not something that is going to happen like it was. We have to understand what took place back then is not what's happening now. So we got to get that concept and understand, like I said, I've been doing this and I've been in the mortgage industry since then. So I know firsthand the type of loans that were taking place, I know firsthand exactly what was going on and why that happened. I mean, you even had loans where people had pay option arms, okay? And so what a pay option arm loan was is that we'll qualify you for less than the interest of the loan. So people were paying, they were getting $800, $1 million properties and paying less than the interest on that loan, which adjusted, of course, in, so many years or 6 months, whatever it is. And when that payment adjusted, what was happening is, of course, people could not afford the real payment that it came with. So, nowadays there are some interest-only loans. However, the big difference is with most interest-only programs, you're qualified based upon the principal and interest amount. So that means that even if you get an interest-only loan today, you're going to be qualified on if you were paying the principal and interest payment on it. So these are all the unique differences of why I don't believe that we'll have what happened in 07, 06, 08. I don't think we'll ever go back to that market crash, what took place in, because now everybody is qualified. We're making sure everything is check. Do you have a job before we close? Yes, they verify that. Those are some of the things. That's why I said, if you watch my other videos, I talk about don't quit your job, don't switch employments if you're already in the middle of a transaction, because within 10 days, the lender is going to check to make sure you're still at that job. And if you've switched jobs, that can cause your transaction to fall apart. So that's just a little nugget of truth. But the other thing, just talking about, which is really interesting, is that when we sit down and we're looking at, differences of the market crash, and we're really understanding, what took place back then. Another thing to really understand is that what took place adds, and kind of what spurred all this on and all these changes and regulations, is that the home buyers were actually approaching the government, what was going on back then, which a lot of people have forgotten and maybe don't even know, but home buyers were approaching the government and saying, hey, I wasn't qualified for this loan. So I don't know why they gave it to me. I shouldn't be held accountable for the loan. And so because there was so much of that going on, the government now puts the onus on the lenders to say, you have to make sure we qualify. So I say that to say that when you're going through a transaction and you're wondering, is there so much paperwork? Why do we have to dot all the I's, cross all the T's? That's why. Because what's not going to happen later is you, as a consumer, you can't come to the lender and say, well, you guys knew I wasn't working, but you still gave me the loan. Because to be honest with you, that is exactly what was happening back then. You had people going, and there were lawsuits saying, hey, they knew I didn't make $20,000 a month. They knew I didn't qualify for this loan. So we got to understand what took place then. And just to give a concept of, even when you're going through the loan process now, I understand it might be paperwork. We have to paper trail everything. Everything has to be documented. We have to be able to make sure it lines up. So the reason why is because of what took place in. There's a saying that, people say, one bad apple can ruin the whole bunch, or whatever it is, spoil the bunch. Well, unfortunately, that's kind of what took place. A lot of people begin to be like, hey, they didn't check anything. And so because of that, there's a lot more regulation on it. Those things are the reasons why I went through all that. And I'm saying that because we got to understand that the housing market, yes, are we taking a dip in home prices? Yes. For the last month, I was just reading, I think the home prices for the month of February had went down nationally, had went down. And so why is that important is because, yes, there are always ups and downs in the market. Okay, there's a difference between a market slowdown and a crash. Are we going to crash to where home prices reset and all of a sudden everybody loses their value? No, that's not going to take place. But are there going to be a time that if you're a seller and, you need to sell your home, and right now, if the market's slowing down, are you going to, maybe, come down on your price? Possibly. But on the flip side, especially here in California, and not just California, but nationally, inventory is still low. So even as a seller, there's not going to be a position where you walk in and say, hey, drop your price $100,000. Well, because of low inventory as a seller, you're also going to have your value because there's not a lot of homes on the market. We're still underserved. And, not only were we underserved before COVID, we've been underserved for the last, I believe, like 30 years or something. So what that means is there's not enough homes to house the people here. So, that's why even as a seller, yeah, there's going to be dips in the market. There's going to be slowdowns, mainly because of interest rates, because of jobs, whatever the case is. But as a seller, if you don't have to sell right now, or maybe you put it out there and maybe you wait a while, whatever the case is, you're not going to end up walking away with losing $100,000, $200,000 in value. And as a buyer, you don't have to be worried of saying, hey, I'm going to buy this home and then all of a sudden I'm going to lose all my equity in 6 months, or I'm going to lose my equity in a year. Well, that's just not going to happen. So, the thing of it is that you want to get into a home if you can afford it. It's a great investment. I know here in California, I can only speak of, California real estate is definitely year over year, you're earning at least a minimum of 5%. And so I don't know anywhere where you can earn that kind of not residual, but that kind of equity earned or that kind of interest year over year on average. And so it's a great investment that if you can, there's programs out there, down payment assistance programs. I've talked about that in some of my other videos. Cal Haffa has a great program coming out pretty soon. And so they have options that can help you. The county has programs, the city, sometimes depending on what city you're looking in, has programs. So there's a lot of great things out there that you can do, but it's time for us to really sit down, understand the market, understand trends, understand, what's really going on, and not always listen to the headlines. Even as you read through, your news outlets, there'll be headlines that, hey, banks are failing and, should we not buy right now? Should you stop, not buy and buy later, and interest rates are high. And, some of that, of course, yeah, definitely interest rates are higher than what they've been in the last 2 years, right? Sure. But here's the thing, historically, interest rates are still at a low, historically. So, we kind of got spoiled with that 3.5%, percent down, or the 3% rate, 2% rate that it was during COVID a couple years ago. But those were something that was historic. Okay, when I say historic, that was something that we haven't seen. In 30 years of mortgages, rates be that low. So historically, if you're getting a home at 6-7%, historically, we're still at a low rate overall for the last 30 years. And so it's just something to keep perspective on, that we have to keep track on and keep a perspective on. Many times, we're looking at the market and, there's a lot of panic and a lot of fear. And, we have to understand, the only way to get rid of fear and panic is we have to, I believe, educate ourselves, understand what's really taking place. Talk to your local experts. Talk to the ones who do this, who live and breathe every day. We're doing it, and it's just funny because, so many times people will sit there and and listen to people who don't even do this. You know what I mean? That's like listening to somebody who, who's not even a doctor, hasn't even studied nothing with the body or anything. And we'll listen to them on what we should do with our body, how we should take care of it, and XYZ. But it's like, we got to understand, go to the experts and listen to them and understand what's really taking place in the market, because you don't want to miss your opportunity by listening to something that's clearly just not true, or by listening to something that's misleading. And you can miss out on your opportunity to save, and your opportunity to grow, and your opportunity to build wealth. All right. So once again, I love having conversations. Definitely, if you have any other questions, DM, contact me. Always here to talk. But I just want to give my perspective on kind of what's going on in the marketplace, and, kind of give a good perspective on what happened in, the crash, and why, kind of the difference of what's happening now. All right. Take care.